Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. We've been conducting these town halls for the past 2 months, 8 straight weeks. We greatly appreciate your time and being with you. We always learn a lot through your questions, and we've got a fantastic program today. Before we get going, let me just review a couple of housekeeping items. Hopefully all of you are becoming more and more familiar with our webinar platform. You've got this toolbar at the bottom where you can access the materials for today's event. You also have a CPE button. At the end of this webcast, you can click that to get your certificate. You'll also have a post-event email sent to you where you'll have information on how to get the CPE certificate. And you can receive CPE for watching the live event. If you're watching the archive event, you will not be able to earn CPE. Finally, you can resize those different screen boxes to add to your overall experience. Please do also adjust your volume. We want you to ask questions. We've got a big team here that are actively responding to those questions, and towards the end of the hour, we will take a number of the broad themes of those questions and discuss them with our panel. And you can download the materials. So we've got a great group of presenters. I'm Eric Auskerson. I'm the President and CEO of CPA.com, the AICPA's business and technology subsidiary. And it's just it's a very important time for all that we're doing and helping the firms navigate all the change that's out there. With me today are Mark Koziel, who leads the firm services area. I know a lot of you know him rather well. We also have Mike Traybold, who's a director in compliance at Paychex. Payroll companies are playing a critical role here, and we'll be hearing about what they're doing right now related to the forgiveness process. We've got Lisa Simpson, and it's her team who's been driving the building of all the resources, the most recent one being the forgiveness calculator. So you'll be hearing the latest from Lisa on the forgiveness process and our tools. And then finally, Mark Peterson, who leads the advocacy group for the AICPA. It's been a very, very busy time, and we're going to get the latest from Mark on what happened in the House today and what's upcoming in the Senate. So this is our agenda. It's our standing agenda. We'll kick this off with some broad status comments. Then we're going to get into the pending PPP legislation. We'll talk about recent guidance, do a little bit of a deep dive into the forgiveness process and calculator, and then we'll close with the open forum. First off, it's been a very, very busy week. This is a sprint week. We've been saying that this overall business relief process is a marathon, and sometimes we've got sprints, and it started on Friday night with another drop of guidance from Treasury around 11:15 at night. And we've also had this activity occurring in Congress. We've got a lot of work in updating the forgiveness calculators occurring with the payroll providers and with the AICPA. We know the firms have been extremely busy. We're also going to be talking a little bit about what's going on with the lending community. We know there's continuing issues on the firm-lender relationship, and we're going to talk about some things that we're doing to help address that. I'm highlighting our coalition group here because this coalition group is continuing to play a key role in helping us put together the tools and the resources that we're providing to the firms. They supported us last week on the development of the forgiveness calculator and have just been a real important resource. And it's really a team effort. And I think that's when I talk to a lot of the firms, they're realizing that it's their partnership with the payroll providers, with the banking community, and with their clients, and together we're delivering on this overall business relief activities. So where are we at right now? We're clearly in the forgiveness and compliance phase. We know that this phase is going to go into June, in particular with the pending legislation. The forgiveness period is now going to be extended. It's really just a question of how long. With that said, there's going to be some restart going on. So there's going to be more and more discussions between you and your clients on how to support those restart activities. We're going to be talking more about that in coming weeks, tools that you can put in place to help advise your clients on how to set up their workplace environment, as well as working with them on a forecast, from a forecasting and cash flow standpoint, putting the best use possible related to the funds that they're receiving through business relief. And we're also going to be having additional applications for the PPP loans. We always talk about, what's being discussed in the media. The media are playing a very important role. There's a lot of great updates coming out from the media. And, two of the topics that we were highlighting this week is, one, just that the demand has really decreased for new applicants, even though there's 100 to 140 to 150 billion dollars available, and a lot of that's around lack of clarity around the forgiveness process. So we're hoping that that's going to change, and more business relief can be provided to those businesses that need it. And the second article here is really a setup for what Mark Pearson will be discussing in a minute. Let's also just do our weekly check-in on what are the latest SBA PPP numbers. This is as of 5 p.m. last night, and I just want to kind of comment on it compared to the numbers last week. There's a slight uptick in the number of small business loans by about 150,000 or so, 50 to 100,000. So the total loan number is now 4.45 million. Sorry, we don't have the million in that. And then the total loan amount is 510.5 billion. That's $500 million less than last week. And what's happening? What's happening is there's been some returning of funds, but in our discussions with SBA, we also know that there's been a lot of double applicants and just some correcting of that information. So that's why we're at the $510 billion number, but that has stabilized. And hopefully, as more businesses apply, that they will start utilizing the additional funding that's available. One final comment here is just looking at what's happening with the average loan size. That is going down, and the category that's growing the fastest is the loans below 50,000. Right now, 64% of that 4.45 billion in small business loans are below 50,000. And we expect that category to continue to grow. And if you look at how many loans are above 2 million, that's a category that gets a lot of discussion. It's roughly 30,000 loans, and that's only 0.9% of the total. So, Mark, with that, I know you're watching your feeds there. Mark Peterson, why don't you give us an update on where things stand with this very, very important PPP legislation?
Sure. And to kind of tee that up, there has been, ongoing bipartisan Republican and Democrat, bicameral House and Senate support for creating some flexibility. We have definitely been advocating for creating flexibility around the program. The House put forward a bill, which I'll describe to you shortly. The Senate is currently not in session. So the House passed this bill today, 417 to 1, which is about as strong a bipartisan vote as you can get. It is a strong signal to the Senate that they need to do something to address this when they return next week. So, all indications are that they're going to be acting in the near future. There will be a lot of pressure on them because of the bill passing the House. These are probably the most timely of issues because of the 8-week clock that's been ticking. There's definitely anticipated a second round, a CARES 2, that we think is going to happen in a bigger package that will be addressing, other issues and potentially putting more money into programs. That has yet to play out. The House did its version, but we still need to see something, coming out of the Senate. I think that's probably a July exercise. Next slide. So today, again, overwhelming vote, the House passed a bill that provided more flexibility around the 8 weeks, taking it to 24, made changes to the 75% requirement on payroll, changing it to 60. There was a little controversy around that. Initially, the bill eliminated that requirement completely, but through negotiations, they got it up to 60%. They also extended the entire program to the end of the year, extended the terms of the loans to 5 years, and also full access to payroll tax deferment. One issue that did pop up and is being reported is apparently there is the potential for some challenges in the drafting around the 60%, that if in fact you dip below that, you lose forgiveness. That was not the intent. And so they'll have to do a technical correction to address that, but that's something that you may see in the media. That was not the intent. The second issue that was voted on that I wanted to bring to your attention was, as Treasury and SBA has been working through this program, they have talked about, oversight and review of the loans. And what they really focused on is the loans over $2 million and having some type of review over those loans. So that's been discussed at both SBA and Treasury, and we should all anticipate that that's going to happen. There is going to be a lot of oversight and some very specific over the $2 million. What they tried to do in the House today was to basically put that in statute, to have the requirement voted on by Congress, so it wasn't just regulatory. It was a requirement that would be, legislative required and in statute. Actually, because of the procedures that this was taken up on, which required a 2/3 vote, that failed today. It did get a majority, but it did not get the 2/3 that it needed because of the way it was considered. I will tell you that does not mean there isn't going to be oversight. We're going to see a lot of oversight. Eric just showed you some of the press, and they may actually come back to some type of statutory requirement. But again, that did not prevail in the House because of the procedure it was taken up on. But that should not lead you to believe that there isn't going to be, scrutiny over the loans and the recipients of the loan, particularly over $2 million. So I'll turn it back to you, Eric.
Yeah, Mark, thank you. And we've been stating that all along. We don't have the self-assessment of need slide in today's presentation, but since the first week in April, we've stated that there's going to be both governmental reviews and external reviews, not just of the loans above $2 million. The loans above $2 million will have the liquidity review, but all loans are subject to the FOIA Freedom of Information Act. So this just, as you said, Mark, was just Congress looking to reemphasize a right that is already part of the PPP Act. So moving on to discuss what is the impact? What's the impact of this pending PP legislation? So Mark Koziel, we've been talking about this. Even though we don't know all of the details of the bills, we do know enough to state these 4 points. So I'll let you, add to them.
Great. Thanks, Eric. And yeah, I think that the biggest part of this is the flexibility aspect, whether it's 24 weeks, 16, 12. 24 got passed through the House. The Senate wanted a smaller number. Hopefully they can get over that. But no matter what it is, it increases the flexibility. And I already see in our Q&A section, there are boatloads of questions around the different types of expenses that can be included. Bottom line is the loan amount's going to stay exactly the same, right? So, if we were given a $100,000 loan that was based on two and a half months of payroll, and now we come on the back end of forgiveness, and rather than we have 8 weeks to spend it, we have 24, we should easily be able to get that within the payroll number. You have the 60/40. I don't think, having cell phones and utilities becomes as important if we have this ability to stretch it over a longer period of time. But we'll see. Time will tell. There's a lot of compliance-related issues that we're going to have to deal with. So even on some of the questions that people are asking, I apologize. I wish we could provide better answers. But, this all changes the game considerably in how we're going to have this discussion. So just
hey, Mark, just on that, I mean, we said, the slide says significantly increases, but it simplifies things. As you said, we've been getting a lot of questions, on all kinds of requests. Could this qualify? But it's just going to simplify. You're not going to have to, think about all those corner cases.
That's right. It's going to be probably more so for the majority of businesses that are out there. They're going to hit it with payroll, just straight up paying the payroll, and all these other pieces are just not going to be as relevant. So the question is, do we have to report on it or don't we, when we're not going to actually take it into the forgiveness calculation? Once we hit that loan amount and say, okay, it's forgiven, and we provide the backup data on that, we should be done. But on the compliance piece, the FTEs and the average salary to make sure that people were still getting paid the same, that will continue to be necessary, and we'll get into what, Paychex is up to with Mike. But, that I'm not going to say it's going to be more complicated because of that, but we can't answer unanswered questions right now until that passes. Because the application is going to change and the calculations are going to all change. And so it kind of puts us on a wait and see. I know, you gave me a ribbing last week for telling everybody to take the long weekend off. I took some ribbing on Twitter from some people to say that we knew something that they didn't know. But this is exactly it. I mean, with this legislation changing, everything changes in the process. So talking to your clients, letting them know that, and letting them know there is nothing you can do right now. For those clients who worked really hard to get payroll within 8 weeks, apologies, but there's not much we could do with that. And I get it. They were basing it based on how the rules were then, but there's not much we can do. For the clients that haven't yet spent it up, giving them that relief and doing some additional planning as you go forward. And then I think bigger, your phones are going to start to ring again of those clients who may not have gotten the PPP loan or may have been on the fence at the time. Definitely now an opportunity to do it, especially given 24 weeks and we're a number of weeks later. They're getting closer to opening back up, even if it's at 50% capacity. So there should be a new wave of applicants that takes place during this time.
Hey, Mark, just one other comment before we leave PPP. I described what passed the House. The Senate's coming back next week. They're going to have to deal with it. We do believe there are going to be changes with this. So, to Mark Koziol's point, we still are going to deal with some uncertainty. It is highly likely that what the Senate takes up and ultimately passes will change. Things like the percentage, things like, whether it's 24 weeks or 16 weeks. So, again, there was momentum started today and that process had to get going, but it is highly likely that this package will change before it's actually sent to the president.
Yeah, and Mark,
yep,
Peter,
and that's a great.
It's a great point, and I just think the thing that what we do know though is when we get to the calculators, they're going to change, but everybody at this point, it's going to be an increase from the 8-week period to something longer, yes. And that's going to. So all of the bottom line points that we're making here are relevant. And then once we get all the specifics, then there's no reason this week for someone to be filling out the forgiveness application, even though there might be a couple businesses getting pretty close to being done with this 8-week period, because it's going to increase. So it's basically at this point, it's good to be informed so you can have those scenario planning discussions with your clients, but you won't have to go through the actual technical exercise. And I think it's also, we'll be hearing about this in the media. We're going to hear about it from our clients, that there's going to be frustration. There's going to be businesses that went out, brought some employees back, had some tough discussions, and then because they thought it was an 8-week period, and now it's going to be a 16 or 24-week period, and that really does change the decision making. So I think let's just all get on the scenario planning as soon as possible. And this is it's a very fluid situation here.
Yep. And I would also assume this is why we haven't gotten the FAQs that Treasury said were probably going to come out within the last week. So I'm assuming that that's a big reason why we haven't seen those, or the sample calculations that they have, because they too know that those calculations are going to change. The only thing that has been different since last Thursday, a couple things. There were a couple of interim final rules that came out on Friday, and they really didn't say much. I mean, they talked a lot about what was already in the application. We had covered, Lisa Simpson covered a lot of the items that were already in there, so we didn't report on it over the weekend. We made some minor adjustments to the calculator this week, but really not a lot that took place. Now, yesterday we thought maybe we were going to see some additional guidance, because the FAQ document on the Treasury website, they changed the date to yesterday's date, May 27th. And we went through and we were like, wait a minute, there's still only 48 FAQs, so what changed? They didn't add any FAQs. Well, the super sleuth that we have in Lisa Simpson and her team, she dug through it all and found that in question 45, they changed the safe harbor deadline to May 18th, because the original FAQ had May 14th. So bottom line is, I mean, that was well over a week later. It was well after the fact to say that the safe harbor deadline was going to change. So really nothing to look at there in the FAQ. That date had already passed by the time that they made the update, but it made us a little curious on why they changed the date. Now we know. So really, no new guidance. I wish, we had more.
But one thing you do know that we know there's going to be 20 to 30 FAQs coming out at some time. And the question is just when. Will they do that before the legislation? Are they going to hold that? And we're going to be asking those questions to Treasury and SBA. And as Mark said, we get everything out as soon as we know it. We put it out on social media or in statements. And we give everything we know during these town halls.
When it matters. I mean, yeah. And I think the big thing, Eric, with that too, is, we'll pour through. If let's say the FAQs hit today, we would pour through them and say, okay, what does matter today and what could change based on the legislation? So even if they did drop those 25 to 30, there may be some in there that will help us define a little bit better with no consequence over what happens with change legislation. So we would go through that exercise, but at the same time, you may just find that it may be easier for them to also wait until they get that taken care of. Eric?
Yep. So Lisa, you're now going to take us through kind of the status of the IFR rule updates and, work through some of the details here in these calculations. A lot of these slides for the attendees, they're there for reference. Lisa will, do this at a high level, but we wanted to give you as much guidance in the slides as possible. So with that, Lisa.
Thanks, Eric. And Mark kind of stole my thunder. There's not a whole lot of new stuff in the interim finals, but there are some details that got teased out that we'll try to talk about. And of course, more questions were raised. But if we start with the interim final rule on SBA loan review procedures and borrower and lender responsibilities, I think it pointed out some things that had come out in the application last week. The lender has 60 days to review the forgiveness application. The SBA then has 90 days to review and make their final determination. The question that's not answered there specifically is when do the borrowers apply for forgiveness? We talked last week that the loan application form has an expiration date of 10/31. Obviously, if the legislation passes that extends the forgiveness period, then that will change as well. It is important to note that the SBA can review any loan for eligibility and forgiveness. Again, we already knew that, but they are very specifically pointing it out in this interim final. So we wanted to call that to your attention. And it's also important to note, just like it says on the loan application and the forgiveness application, borrowers may be asked questions by the lender and the SBA. There's also an appeal process that they outlined in there as well. Then if we get to the interim final rule on loan forgiveness, again, this talks through a lot of the things that came out with the 11-page forgiveness application form that was released on May 15th. And just a couple of things to note. It does call out that if there was an idle advance, so just the advance amount, the SBA will deduct that from the forgiveness amount. We had a question in the chat about whether or not the entire idle loan would be subtracted from the forgiveness. It's just that emergency advance. Any remaining balance due after forgiveness will be due on or before the 2-year maturity of the loan. In terms of payroll costs, there were quite a few pages and questions dedicated to payroll costs eligible for forgiveness. Again, if you joined us last week, we talked about the payroll costs paid or incurred during the 8-week consecutive covered period being eligible for forgiveness. This also talks about the alternative payroll covered period that the loan application called out, and that is only for borrowers with a biweekly or more frequent payroll schedule. And they can align their 8-week covered period with the beginning of the first day of the pay period following their PPP loan disbursement date. So they're giving us a little bit of flexibility for some borrowers. The eligible payroll costs include the payroll costs paid and payroll costs incurred. And that last paragraph on the slide there is creating a lot of chatter, let's just say. Payroll costs incurred during the borrower's last pay period of the covered period are eligible for forgiveness if paid on or before the next regular payroll date. That is being interpreted by some as allowing for more than 8 weeks of payroll to be included in the eligible payroll costs for forgiveness. We will wait and see what comes out in the FAQs. I don't know if they're going to give us examples that will clarify that, but I think it's also a possibility that they could come out and say payroll costs are for the 8 consecutive weeks or the 56 days of payroll, and that you can't really get 11 weeks or 10 weeks as some people are interpreting that to see. So we'll just have to wait and see on that one. So more to come.
At least on that there too, it comes back to if they extend the period, that becomes less of an issue as well.
Thanks, Eric. That's a great point. Then we move into some clarification on payroll costs, whether or not bonuses can be included, hazard pay, and pay to furloughed employees. We've gotten quite a few questions around that during our town hall, and the answer is yes. Those are eligible for forgiveness, subject to that $100,000 annualized cap that everyone has, which translates to $15,835. There were some interesting developments for owner employees, self-employed, and general partners. They are, as mentioned on the application for loan forgiveness, owner employees are limited to 8/52 of the 2019 compensation or $15,385, whichever is lower. A new twist came in that it is limited to $15,385 per individual in total across all businesses. I'm sure that we'll see some FAQs come out on that, but it looks like an individual is limited to $15,385 total. Owner employees are capped at 2019 cash compensation and employer retirement and health care. To knock out a couple of the questions in chat, no, there is no definition yet of who is an owner employee. We've talked in the past about the CARES Act is not written like the tax code that we're all used to, so they're not as specific. And so we'll wait to see what comes out in FAQs around that. There's also some questions. So for an owner employee, not a Schedule C filer or general partner, does that $15,385 cap include their retirement and healthcare costs? Again, I think people are interpreting it different ways, but I would expect that an FAQ will clarify that as well. Schedule C filers, we knew were going to be capped at that owner compensation replacement concept that was discussed in previous interim finals based on 2019 net profit. General partners, they have capped at 2019 self-employment earnings multiplied by the 0.9235. The big catch here is that there is no forgiveness for retirement or health insurance for self-employed and general partners. I think some people were interpreting that based on the loan forgiveness application, and now they've clearly spelled that out in the interim final.
So Lisa, all of this
At least
is
to that point,
no matter what, because some of this stuff does matter, if, you know, for the self-employed, more guidance is going to be needed.
Yeah.
Yeah, but there too, Eric, given that they're going to stretch it from 8 to 24 weeks, there's greater chance of forgiveness there as well.
Well said. That's right.
Yeah. All right. Looking at the non-payroll costs, we knew that interest payments on mortgage obligations on real or personal property were going to be there, rent obligations, utility. As we've discussed, still no examples on what is a utility, what is transportation, do cell phones count. But as we keep saying, if we can get that forgiveness period extended, it shouldn't be a problem to cover those costs with payroll costs. We had a conversation last week about paid during the covered period or incurred during the covered period and paid on or before the next billing date. The interim final clearly spells out that could result in more than 56 days of expenses being eligible for forgiveness, and it talks about some administrative conveniences there. But with the current cap of non-payroll costs cannot exceed 25% of the forgiveness amount, they apparently have made the decision that that's okay. Again, we'll see what happens with pending legislation. Next slide. Right. So last week we talked quite a bit about the loan forgiveness application. We went through some of the concepts. Just wanted to put this up on the screen because it looks so nice and simple up here. But in reality, there are quite a few steps that will need to be followed. Here's an overview of the 11-page forgiveness application that was released on the 15th. So I really encourage everyone to go through and read the form and read the instructions. It's going to make a lot more sense as you're trying to go through some of the calculations around the wage and hour reductions or the FTE reduction calculations. But again, you've got a calculation form, which is really the last step. You've got some very important certifications to read through there, and then you'll get into the Schedule A and the worksheets and document requirements.
Sorry about that.
We spent quite a bit of time last week. Oh,
yeah, sorry. The slide just moved for some reason, but we're still now in the loan forgiveness application slide.
We can scoot to slide 23 if you don't mind.
Yep.
All right. So the famous or infamous loan forgiveness calculator, we have been tweaking it over the course of the last week, and we'll continue to make edits as FAQs come out, as we get more guidance that, like we've already discussed. So I do encourage you to check back often. You will see that we post on the actual form the date that it was last updated, and you'll actually see it on the face of the web page as well. As a reminder, read the application document and keep it handy. Check out those helpful hints that we have on the first tab of the page. Enter every blue input cell, because if you don't, then primarily around FTE inputs and the salary and wage reductions, some vital information could get overlooked. So as you're doing your scenario planning, please do input all the blue input cells. The FTE input calculation is not embedded into the spreadsheet. There are several different comparative periods that you'll need to use in looking at FTEs, and we suggest that you work with your payroll provider to see if they can help with that FTE input calculation. So again, just as a reminder, check the forgiveness calculator on a regular basis. We appreciate all the feedback that we've gotten, both positive and constructive, and we are certainly taking those into our consideration as we try to make this the best that it can be. We understand, my affectionate term for it now is it's a beast. It is a complicated spreadsheet. We will be working to produce a simplified spreadsheet for self-employed with no employees, and we will try to have that up as quickly as we can.
Well, thanks, Lisa. Thanks, Lisa, to you and your team on this. And as the loan calculator that we put out, 5-6 weeks ago now, or even longer than that, that got over 70,000 downloads. It was utilized by a lot of firms. The loan forgiveness calculator, it's getting that type of interest. It's comprehensive right now, as you said. We will break it out into parts so it can be more fit for purpose. And I think this is a good segue to our discussion with Mike Traybold, because the payroll providers are going to really work hard at simplifying some of these compliance elements for the forgiveness process. So, Mike, why don't you just take us through what you're thinking about as a payroll leader on the forgiveness process and the points that are highlighted here on this slide.
Yeah, absolutely, Eric. And again, thank you. Thanks for the opportunity today. We take a lot of pride in our status as the AICPA's preferred payroll, HR, and retirement provider. So, the ability to work with you guys at the AICPA and your council and your partnership has been really helpful in helping to create our process here. We've spent a lot of time on our version of this forgiveness estimator. With the kind of the baseline intent of trying to take as you've heard, a very complicated and very fluid set of requirements and making that into what we believe is as simple a process as possible. In our world, it pretty well meshes with our client dashboard, our Flex dashboard, and a lot of the information is that we have, that's kind of the luxury that we operate with. We have a lot of the important information that drives the calculation and the estimation. So we're able to pull that into our estimator pretty easily and have that drive a lot of the arithmetic. You've heard a lot from Mark and Lisa and Eric about how fluid the process is. Obviously, some pretty significant points that we're still waiting for guidance on. To that end, we have not formally unveiled our estimator yet. We think, as you've already heard, there's some imminent information coming out. We've been telling clients and certainly the CPAs that we interface with, and you've heard this already, highly likely that there's going to be an extension of that 8-week time frame. So that should definitely provide some additional breathing room as we go forward and work through some of this stuff. So, I'm fortunate to have a team of very smart compliance professionals who have been watching all along for all the changes and tweaks and nuances. We've been very diligent with integrating those into our platform. We think we've got a really good tool. Again, most of the information in there we can pull right in because we already handle that stuff, whether it's, the payroll and the headcount information and all those types of things. Certainly there's some data that clients are going to have to provide that we would not have, whether it's some of the non-payroll information or even some of the particulars from a headcount perspective and so forth that we may not necessarily have. So, we are very clear with clients about what they're responsible for putting in and how they need to make sure that that information is accurate. But we support that with a tremendous amount of supporting information and clarity on what that means and how they can do that, as well as certainly assist them in that exercise and work closely with them to work, again, as you've mentioned, with their CPA to help on some of the scenario planning aspects of that as well. So we are very confident that, we're going to have a tool that is going to be very helpful and will be very able to be relied on with a great deal of confidence. The additional nuance that we have here at Paychex is we handle for many of our clients both their retirement and their health and benefits aspects as well. So again, that's a really additional benefit, is just to pull that information right into the calculator. Sometimes, a client will have to go in and tweak that. We call it downloadable, but editable. So there's aspects that, if there's additional benefit features that a client's getting through a provider other than us, they may have to go in and change that. But again, copiously supported by instructions and other information that's going to help make that process very, very easy. A little bit of color, we around kind of how we've teed it up with the banks. We deal very extensively with a whole array of banks, both really large money center institutions that help to run our money and process the financial payments, as well as smaller institutions that help us with referral arrangements and so forth. So we've had the chance to really partner with them as well to get perspective as to what they'd like to see and what they would be comfortable with. I think most of them would love that all payroll firms would use a standard reporting format in this regard, but that's probably not terribly realistic. But we found their primary asks of us have been to have a tool that's intuitive, that's well supported, can be easily navigated, and that easily links to some of the supporting data, some of the supporting payroll and tax reports that can substantiate some of the numbers that will go in aggregate to the calculator itself. We're kind of portraying and talking about our estimator tool as kind of the cover letter that will hopefully give the borrower or the lenders a really good line of sight into the information, and then based on that, they should be able to facilitate the process relatively easily. We were obviously heartened to see in the last round of guidance in the IFR the designation that there can be a significant amount of reliance placed on reporting from recognized third-party payroll providers, thus lessening the amount of work that some of the banks would have to do. One of the things that we've been interested in from the banks and heard some stuff from them as well, just by way of information, is obviously a lot of concern that everybody's seen about some of the fraudulent loans that have gone out there and some of the bad guys that are trying to take advantage of the situation. One of the things that the banks have told us they like about the process that we have and some of the other big payroll providers have is the fact that we do some relatively rigorous upfront vetting, mostly for credit purposes, but we do kind of a know your customer and a validation of the integrity of the clients at the front end. So that's the banks are finding that that's giving an incremental amount of comfort from a fraud situation as well, which again we've found interesting, but certainly supported as well. We've also had the opportunity to talk again with a lot of you all, a lot of the CPAs. Feedback has been very positive in the conversations that we've talked to with the CPA community across the country. We've gotten some really great feedback and some really great advice. We think the tool is going to be really good because many of our client CPAs have the ability to go right in to our client dashboard, and we'll be able to go right into this tool and both help supply some of the non-payroll information that will be important, but also we'll be able to on a real time look at how the client's progressing towards hitting some of those metrics that will allow them to qualify for maximum forgiveness, and then provide guidance on how to make sure if adjustments are necessary to kind of get there and tweak it to make sure they get that benefit, that forgiveness benefit. Will be really helpful as well. So I think it really will help facilitate a partnership with the CPA community as well.
Hey, Mike, I mean, that's a great summary. And just a couple of comments. We are working, Mike and Treybold and the Paychex team are working with us and the overall coalition to help drive a common approach. So we're working with all the payroll providers. That would be beneficial for some of the firms as well as the banks to have some standardization. We, with our forgiveness calculator, have worked very closely with some of the leading payroll providers, ADP, Paychex, Gusto, to long list, and we're having weekly calls with a broad group. So that's what our goal here is, to try. There's a lot of complexity out there. And one thing, Mike, we're in the fog right now of just understanding all this data. I think in 10 days, hopefully, there'll be a lot more clarity in that, as you work through it, as the AICPA team works through it. So I think that's something for the firms to keep in perspective. Mike, we'll come back to you during some of the Q&A, but thanks for all of those comments. This is an important topic, the firm lender activities. We continue to talk with a lot of the firms. We know there's many instances out there where the lenders are not supporting the agent fee, even though the firms are following the guidelines and recommendations that we put out in a statement with input from the American Banking Association and others. What we're going to do is we're going to work on issuing an expanded statement to provide additional clarity. We know it's an important relationship, and when firms are doing the support and engaging with the banks, the agent fees should be supported, and we're going to work harder on that. We've been working on that, and I just want to let you know that we're aware of that issue. So more to come on the next town hall. We also had a question. I saw a question that came in, and I appreciate it. I think there's over 500 questions that have come in, but a question that came in related to when are the banks being paid. The banks need to file the 1502 form, and I don't think has really even started. So the banks haven't been paid yet, and obviously you haven't been paid by the bank. So that this is a work in progress for all of us. So Mark, loan forgiveness, why don't you cover this slide again and talk about how it connects into all that we've been discussing.
Yeah, we've shown this before, Eric, and so I'm not going to go into great detail on this, as we do want to get to some questions. But, I think this is a helpful guide on the forgiveness process, and some people have asked questions around, getting paid by their client for the forgiveness process. The way we understand it is generally yes, but this matrix will start with the type of service that you already provide to your client, whether you're doing tax only, client accounting, maybe you're doing some type of a test service. What level of service can you then be providing on the forgiveness? And it even goes so far, I think, in some of the bigger companies and some of the bigger firms that may already be talking to the banks in their market, and the bankers asking for some level of assurance, so agreed upon procedures on the back end for the firm to help the bank kind of sift through all this information that comes in and help to work through the forgiveness calculation. So there's a lot of great information, and the matrix will take you through. Sample engagement letters are linked into it, and sample reports are in there as well. So this will help in the forgiveness process.
And we'll move on, but Mark, as you and I are hearing, a lot of firms, some firms are actually building, support services to the banks related to forgiveness. Everybody wants to get forgiveness right. Last week we talked a little bit about some of the fictitious applications that had occurred, and the banks and the firms and everybody, the SBA, want to make sure that we identify those as quickly as possible. So one thing that we've always talked about was a lot of, go ahead.
Yeah, no, I was going to say, I got a call from a firm last night about 9 o'clock asking that very question. They're set up for business. They've had an SBA help center throughout this entire process, and now they're trying to get into the process of those $2 million loans. What Mark Peterson was talking about, the bill that failed, but we're still working toward having the CPAs involved in that $2 million plus process. But banks are already starting to ask locally, the local banks, community banks, certain CPAs to help them on the back office.
Thanks, Mark. So here we didn't talk. We focused today on PPP, and on other sessions we've talked about EIDL and ERC and we're going to comment quickly on Main Street lending. But once again, many different business relief options. There's talk about the CARES Act 2 or Phase 4 relief programs. That's something that we spoke about last week, and that's most likely a late June, July activity. But just something for us all to keep in mind, and we'll continue to give you updates. But Mark, do you want to give a quick, fast comment or two on the Main Street lending?
Yeah, incredibly fast. These are bigger companies. These are ones that have exhausted other lending opportunities. There's a new FAQ that came out yesterday. The team is sorting through it. A lot of it is just getting into some of the technical aspects, specific certifications that are in there, what the quarterly and monthly financial reporting requirements are going to be, and then this demonstration of need for this program, saying that you could not get adequate credit accommodations from other institutions, therefore you need this program. So there are those who are in the audit business, the attest, producing financial reporting. There are going to be opportunities for firms around this.
Thanks, Mark. And Lisa, I'm going to have you, and one thing, we are answering as many questions as we can. We leverage these questions to build our resource center, so thanks for asking them. I'm going to kick it off just with a question to Mark Peterson. I saw it come in on deductibility. So that's something that we don't, Mark, need to worry about tomorrow, but where does that stand, the deductibility of the forgiven PPP expenses?
Right. No, I'll tell you what, we've seen tons of support for it. House and Senate, Republican and Democrat, multiple bills have been dropped. We've had the leadership of both the Ways and Means Committee and the Finance Committee in the Senate, who are the committees responsible for tax issues, both basically tell Treasury that the intent was that it be deductible. And so all they need is a legislative vehicle. I don't believe that it's going to be, the extension of the 8 weeks that we just talked about. But the next legislative package, it's highly likely that would be included. And as you mentioned, Eric, we do have some time to fix that. But I would put that very much in the likely category.
Yeah, it's likely we have to get that done no later than the end of this 2020. And it looks like that it'll be in the next batch of legislation. So thanks, Mark. With that, Lisa, what are some of the big themes out there that we want to discuss here in the final minutes?
One of the questions that we were getting during Mike's session about the payroll providers was, will the loan forgiveness calculator that the AICPA has developed tie into or be fed by these PPP compliant reports that payroll processors are preparing? Boy, that was a lot of P's. Right now, if you've used our calculator, you know that it is locked, so you can't really import information into it. That is basically designed to maintain the integrity of the formulas, but as we work forward through the process, we certainly want to make this as simple as we can for borrowers and the CPAs who are helping them. So we're taking all of those suggestions and questions under advisement and are more than willing to see how we can make that come to fruition.
And Lisa, there's even discussions about automating. That's one thing. I think everybody wants to understand how the forgiveness process works, but there's going to be increasing capabilities related to it. So it's probably one of those things, be informed, but wait on doing the work. Does that make sense, Lisa and Mike?
Absolutely, it does, Eric.
So. Mm-hmm. Yeah. We also got a question back to the service matrix, Mark, that you talked about earlier. There was a question in the chat about, have we released an engagement letter for the consulting services? And I'll give a shout out to our friends at CNA who are on the call with us today. CNA is part of the AICPA Professional Liability Insurance Program. They have provided a simple engagement letter that you can link to through that loan forgiveness service matrix as an example engagement letter for consulting services. A shout out to them. Absolutely. We had a question about whether or not S-Corp distributions are considered as a payroll cost. And I think the answer to that is no. It is for an S-Corp owner or a C-Corp owner-employee. It's based on wages for 2019, not including distributions. Still getting questions about what's going to happen.
Process too, Lisa. Yeah, I mean that was clear in the application process, Lisa, too, right? So there's no real change.
Exactly.
You know, I think those things that were well defined in the application, we can't assume are going to necessarily all of a sudden change in the forgiveness piece. Yeah, there's obviously the 8 weeks would be one of them, but you know, for the most part, wherever it was clearly stated in the application, you could assume that's how to calculate the forgiveness.
Yeah.
So Lisa, maybe time for one
again,
more question.
there are almost 600 questions, so we're not going to get to them all, and I know that we do have some other things we want to hit quickly.
All right, well, thanks, Lisa. And again, thanks for those questions. We got a team here. We're going to add to that team next week. We're responding individually to as many as we can. I want to thank the group here, the AICPA leadership team, and Mike Trable for participating today, and for the broader team that put together all of these materials. This is our resource center. It's got the forgiveness calculator. It's got archives of the town halls. It's got other videos. Leverage it. A lot of good information there. And we also have information on some of these other business relief programs. We want to let you know that we're going to be updating the look and feel of this resource center. So just a heads up, that will be coming out in the next week, and this is a screenshot of it. We also have a broader coronavirus tax resource center, and you can find both of these just by going to the AICPA homepage and navigating from the homepage links. So just in conclusion here, once again, this is just such a defining time for the profession, for the 44,000 firms. The firms have been mobilized since day one of the pandemic, making sure you stayed operational and you're working so hard with your business clients. This is a time that is critical for us to stand up and play that trusted advisor role. There's a lot of good articles being written about how these programs really are helping sustain these businesses during this time, and we're going to help with the restart. So please continue leveraging our resources, bringing us questions. Our next town hall is Thursday at 3 p.m. You saw some of our social media Twitter handles. We put information out when we receive it. We also have a number of official statements. This is a marathon, so stick with it. Have a good day. Have a good week, and we look forward to staying in touch. Thanks for your time today.